Welcome back to the live session from Forex Trading Wizard. The first day of trading week. I hope that you guys ready for another big trading day. And this is the first session. Let's begin another week for the best possible trade setup coming in the market. I'm looking at the market on gold as well as some other instrument might give us trading opportunity, including euro dollar and GBP USD. Here I'm going to do a complete multi-time frame analysis to see what kind of trading opportunity we might have. Welcome, Kevin. Welcome back to this live session now. Looking forward to see all the members present so that we can begin this analysis as well as the potential trade setup for this session. Let's look at the market from the multi-time frame perspective, and then we will be looking at other time frames as well to see where is the best trade setup in the market. I'd appreciate if you guys give a feedback on the live chat that you can see and hear so that you can begin this session. This stream is going well. So let's look at first of all gold, and then we also will be looking at GBP USD and euro dollar. First of all, gold, we have seen early there was long wick candle formation here on the intraday perspective. From the 4-hour chart, it's created pretty long doji in this area. So first I'm looking at the daily chart on gold. What happened today daily after the market opened? As whenever we are opening the chart, the first step is to look at the daily time frame, because daily time frame is where we will be able to find proper entry opportunity from the directional perspective. As if you look at the directional bias here on the daily, you can see that we expected gold from the daily to break below and then to reject back to the upside, and we have seen the market in fact has broken below and then bounced back to the upside again. Currently at the moment the market rejected from this daily support. Is the market now coming back below or bouncing back to the upside? Let's look at the bigger picture monthly to see overall directional bias in this market. From the monthly time frame, we can see that this is the monthly support where the price had an initial bounce, and also this is the monthly resistance where the market created series of lower high in that area. That being said, with this monthly candlestick pattern on gold, we could see the price to potentially, what I think, come back down for deeper pullback. This is the monthly range. So far we are on the 3rd week of the month. Let's draw the monthly high and the monthly low in these two zone. Now looking at weekly perspective here in this market, we can see that from the weekly, here is the weekly pretty sharp drop past week, followed by this week. Once the market opened as expected, as predicted, the market has broken back below from the weekly, and now it's pushing up for a pullback or continuation. Now we still cannot completely comprehend either it's a pullback or it's a return to the major direction of the trend. But once we see the market has shown a clear lower time frame confirmation, we will be able to know potentially which directional bias highly likely to happen. So that being said, I'm looking at the daily chart here on gold. We can see that from the daily time frame, this is the daily move here, and in this daily perspective, this is the daily channel where in the past the market has broken below, and now what we can see that the market from this low, there is a rejection to the upside here. So currently the market is above this daily resistance line. is this going to be bullish or we could see further drop? Now, the overall directional trend that, for example, either daily price is going back to this resistance line 3400 level or coming back to 3200 level, right? So either of these can come true, but for us at the moment to trade for today, as we are a day trader, we can see that from the daily time frame here, this is where the market has made its move back to the upside. Currently we see that the price is way above from the daily market open. This is the daily open where we see today almost 220 pip upside move happen early, and with this 220 pip upside move on the daily from this market open today, as the price has bounced back to the upside from this level, we can expect this market potentially to retest and then to reject back again to the upside. Therefore, today's bias here is, if the market drop to this daily low, we'll be looking for going long. On the other hand, if we see the market tested this high, cross this high, even we could see potential selling opportunities. So these two levels that we will be looking for buying and potentially selling in this market. So looking at the 4-hour chart here, that you can see from the intraday time frame. Now, when we are looking at the 4-hour, as we are dropping, this is called the top down approach. We are looking at, first of all, the top and then looking at down. That means we are looking at, first of all, higher time frame and then looking at the lower time frame to see that how the market is evolving throughout the time frame. That means that how higher time frame has created the lower time frame price action to see overall picture in this market. Now here you can see that from this support level, this is the move that you can see on gold. Now with this move, what we have seen that this is where the price has made its move back to the upside. Now with this move, if you look at the previous session, the 4-hour has formed a doji, which is a bullish price action, and as a result from this support level, the market has made its move back to the upside so far. Now if this price retests that level, there is a potential for the market to either revert back again or go back to the upside to create a new higher high. As the price has made its initial bounce back to the upside, what I think the possibility for coming down here is higher. So we got a directional bias here on gold, that the market possibly to return back again below this low after it reached that high. So what's your bias on gold? Share your opinion. I'm sharing a poll here. I thought on dollar yen. Tana, welcome. Manali, yes. Dollar yen we will be looking at after we do the gold analysis. Also, we will be looking at dollar yen. Now, here we can see that lower time frame, the market is trying to push back to the upside here. This is the daily high so far, as this market has made its move initially to the upside. We could see the market to remain bullish to this level and then to return back again to this daily support level. So let's see that 1-hour chart, how the market structure is forming here. Now this is the lower time frame, as you can see, where we have seen a stronger bounce followed by narrow pullback, another bounce, again pullback. Now it's moving again back to we can see the market again moving back to the upside here in that area to create a new higher high. So therefore, looking at 15 minutes and the lower time frame, now what we can see, the market after retesting this, there's a crossover of 10 and 20 EMA on the 15-minute chart, and the price we have seen there is a break of structure multiple times, and from this break of structure it's slowly building up its pressure back to the upside again to create a new higher high. And that being said, if we look at the 4-hour chart here, where the market is showing its move, and where we can see that as the market is slowly building up its pressure back to the upside here, with this bullish momentum, what we can expect for the market to potentially go back up, hit that resistance. So couple of resistance that we can see the market to reach, and then potentially to return back again to the daily support level. So that being said, what we can see on the lower time frame here, this is currently showing here a bull market, and in that bull market, what we see the market is slowly trying to hit that previous session's high. Now session's high is important, as the market, if you look at the session's high, is approaching the session high, and what we can expect in this market after break of this session high, the price to show that level and then to return back again to test this support, or potentially to move back to the upside. Now for us to find the trade setup, the most important part is to look for the direction of the trend. I hope that you guys enjoying the live session. Make sure you give a thumbs up and also subscribe to the channel if you haven't done yet, and share your thought on gold. What's your opinion on gold? What do you think, which way the market is potentially be heading? Do you think it's gonna be bullish or bearish? So here is the tool that I have posted, and if we look at the calendar, we can see there is a calendar coming, the news, couple of scheduled news coming. Today is Monday, tomorrow Tuesday, coming up CAD, and then followed by NZD. Thursday, a big day on Euro, GBP and dollar, which is a pretty tight news schedule coming on Thursday. And in those days also we could see the market show a potential bigger trading opportunity here in this market. So I'm looking at again on gold, and also you will be looking at some of the currency pairs. Once we can see the directional bias on gold. Now the price is approaching this session's high. Now from this session's high, how the market react, we will be able to determine either this market to turn back to this support or continue to trend back again to the upside. So that being said, let's see how also you can look for a trade on dollar yen as well. If you guys look at dollar yen and euro dollar, also currently trending. So looking at dollar yen along with gold. So dollar yen has done a significant breakdown from this support level, as it is in a bear market. If you look at the daily chart here on dollar yen, now if you look at the daily chart on dollar yen, you can see that this is where there is a retest of the daily high on dollar yen, and in that price action here on dollar yen, after retesting this resistance line multiple times from the intraday, dollar yen has broken back below here in that direction. And what we can expect on dollar yen for the market to potentially to trend back down, or even breaking below further here, and dollar yen could be potentially to be bearish from the bigger picture perspective. Today's high is sessions at 147.57, and that level is quite important, as if the market is getting rejected on the lower time frame on dollar yen, after this breakdown we can look for potential selling, as it has already broken back below. We will be waiting for a pullback, and if the market is straight going back again for another retest, we can look for sell in this market, as it has already broken below. We will not be selling at the moment. until we see that dollar yen managed to revert back again to the resistance line. We'll keep on the watch list on dollar yen, while we are looking at gold also slowly building its momentum back to the upside to potentially break this resistance as 3358 level. And that being said, what we can see that in this instrument on Xauusd with a bounce here, pullback, another bounce, the market is showing its momentum back to the upside here, and where we can see the price slowly trying to break that resistance and potentially to reject back again towards the downside. So now dropping down to the very lower time frame, looking at the 5 minutes, now you can see that here we see a bullish market structure has formed. And in this bull market, if we look at this 5 minutes price action here and the 15 minutes, we see that there is a complete break below to this support, and with this break to this support, the market has penetrated below this support level completely, and where the price has returned back again to the upside. Now what we can expect here in this market to for the price to potentially retest that level, and then if we see that enough price action confirmation for a reversal, we will be selling this market. Now finding a directional bias is important, is because this is where we will be able to see the market to show us trading opportunity. As we have seen that there is a lower time frame bullish trend in this market. Now looking at the 5 minutes, here we can see that because it's a lower time frame bullish trend, we are only currently thinking of the market to go up until it return its directional bias. From the 30 minutes, we can see also showing bullish market structure. So therefore, short-term trend that we can see is bullish. If the market changes its trend, we will be looking for selling. From the 4-hour chart here, that we can see the market is trying to move back to the upside to the major direction of the trend. So I have looked at the 5 minutes. Guys, this is a very important price action that need to look at when you are looking at the market. This is where the most trader makes mistakes in finding the trend direction. So if you look at here, the 5 minutes, how do you find that this market is in a bullish trend or a bearish trend? Is by looking at the market structure. Market structure is very important, as when you see that it's creating a series of higher high and higher low, which is in an uptrend, followed by also you are using two vital indicators that I use for finding the directional bias, 10 and 20 EMA. If you look at here, you can see this is the 20 EMA, this is 10 EMA. Both of them currently showing that the market structure here is bullish. You can see 10 and 20 EMA crossed from each other, which is showing that potentially the market is trending back to the upside. How do you know that EMS can help you to understand the directional bias? Because EMS is more often because they are an indicator of the mean price in the market. How far the price from EMS will determine that how long the trend is, and also when fast EMS shows above, slow EMS below, that means it's considered potentially preparing for a bullish impulse back to the upside. And as an added confirmation along with the market structure, because if you look at here, you can see this is the 5 minute chart, and the EMS crossed from each other in this area, and it was continuing to move in that direction for an extended period of time until we see it changes its direction here, right, for a short period of time, and then again return back to the upside with the major direction. Now currently we can see that 5 minutes EMS again has got back up. If you are not sure how to place the EMS, also you can share in the live chat. I can share here. So what does your strategy consist? What does your strategy consist? That's a very important question. How many of you want to know what does my strategy consist? Share your thought. If I say that many of you want to know, then I can share some of the important nuance that I consider in my trading strategy that can help you to find out. Probably you can cross check with yours to understand how a trading strategy can be improved or can be changed. Because if you are using any strategy, there are some components must be to the winning strategy, right? And if you are not trading based on strategy, probably you are not trading at all. So if you are trading, then most likely you should have some vital, some important component in your strategy to show that you are in fact using strategy that really works. So share your thought. Let me see that how many members wants to know the component that I use in my trading strategy. If you say yes in the live chat, that if you want to know more about that, the topic that helps me to understand. Now, here is the level that you are looking at from the 1 hour perspective. Okay, so yes, anyone else want to know? Okay, Kevin, yes. Anyone else? Okay, so that means most of the members wants to know. I know that many of don't want to write, but okay, let's see that here. Would I? Okay, very good. Now, being curious is very important. You know, when you are trading, the most important quality of a trader, because I had a very extended career in this industry. DV, okay, welcome. You know, I have very extended career in this industry that I know what makes a great trader. See, there are some misunderstanding. You don't have to win a lot of trades to become a great trader. I'm not talking about an average trader. I'm talking about the great traders. Okay, great traders doesn't win a lot of trade. You don't have to win a lot of trade. You have to have an edge in the market, firstly. Secondly, first you need to clearly understand how trading works, right? And then aligning yourself that direction. That's trading. How trading works, and then aligning with that direction. Finding a very important edge, and then creating a solid neuro pathway. Anything can be achieved. Anything is possible. If you look at, you know, anything we do, there is a direct relationship with the neuro pathway in the brain, and in trading is more important than anything else, right? So you see that when we anything we do, imagine that first day you have ride your bike, okay, or drive your car or anything like that. It was very uncomfortable, right? It was very difficult to do because you have never done this before. Your neuro pathway is not working that way. But once you repeat the same thing over and over again, the next time and after you build that momentum, it becomes completely automatic, right? So you don't have to think about it. It just goes by itself, because when it takes over by your brain, by the neuro pathway, okay, whatever, you know, from the mind perspective or from the brain perspective, same analogy. So once you build that momentum, it automatically, because energy flows in the path of least resistance. So when you build that neuro pathway, the energy will flow in that direction without even your any conscious effort to it. Trading is not different than anything else. So what need here is a strategy that you can use to build that momentum to go in that neuro pathway. So if you look at here, this is our brain, you can see that, and think that anything we do, we build a neuro pathway, neuro connection around that, right? So to become a great or better trader, the first thing, the step one is to know what makes a trader, what makes a better trader, right? And once you know that what makes a better trader, the next thing you need is to first formulate a strategy. Taking a trade based on the strategy and then repeat that system over and over and over again for at least 30 days, for at least 20 to 50 trades, 20 to 30 trades in a row. And you build that momentum, you build that confidence, because once you see the proof, it works, right? And that is where the struggle, that is where many traders find it very difficult to adjust with that system. But once you understand that, you can easily do that. Let's understand how it works. Now look at this. If you look at that, let's say any trading habit that we have, if anything we do, it creates a connection, right? And next time it just goes in that direction without any conscious effort to it. But if you build a new habit, the trading habit, then it creates another neuro connection and it becomes automatic. Now, this is the aspect of trading psychology. Now, look at the aspect, that the actual question that was asked. What does your strategy consist, right? So the strategy consists, keep in mind guys, this is another very important criteria. The 5-minute chart, the market is coming down. We are also keeping eye on the chart. From the 30 minutes, we can see the market is trying to break below here, right? So we might see that break of this low. Remember, the most profitable traders use the simplest trading strategy. That's very important to know, because when you use the simple trading strategy, it's easy to implement. And simplicity doesn't mean that you just buy a pin bar. That's not gonna make you long-term profitable. You need to have a set of rules in the strategy, but the rules not very complicated. You cannot keep a lot of confluences that need you to confirm before you enter into the trade. So few important component that you need to consider when you are opening the trade. That's what my strategy consists. That the number one or the most important component that I consider in my trading is trend. Okay, so not only one time frame trend, but also the multiple time frame trend. This is the difference between the strategy that I use and many of the strategy that other traders. I saw that many traders use just one time frame, rely on one time frame, and then trade based on that. But if you look at the multiple time frame, if you wait for the multiple time frame confirmation, you are actually going with a huge majority of the flow. Let me tell you how powerful it is to trade based on the multiple time frame confirmation. Is Let's say you are trading on 5 minutes. This is the 5-minute chart that we are waiting for an entry. Now, when you are looking in the 5 minutes, also there is a trend on 1 hour. Also, there is a trend on 30 minutes, right? So when we are confirming an uptrend on 1 hour, that means we are entering a trade based on 1 hour, okay, or 30 minutes. Then all those people who are opening position from 1 minute till the 30 minutes or even the 1 hour, even higher time frame, we are aligning in their direction of the trend, because successful trader always trade with the trend. Okay, so you won't find any long-term successful traders who doesn't follow the trend, and that's why it is so important. The first component in my trading strategy is trend, and that helps me to understand, to go in the flow with the major direction, with the majority of the traders, which way they are heading to. Once the trend is confirmed, once I know that I am going with the major flow, the trend is only for the direction, right? There are very important triple W that I say that we need to answer to grow our trading account consistently. Guys, keep in mind that the word that I use, consistency, is very clearly attached with trading. Consistency is very important, because today I can open a trade and I can win. Anyone can open a trade and anyone can win. But the consistency, that means that every interval your trading account is growing, is called the consistency. Comes from ticking all the boxes as a trader in the strategy. So when we're looking at the trend, is one component of the strategy. So when I'm looking at my strategy, that the first step that I need to make sure that I'm trading with the major trend from the multiple time frame confirmation. As I mentioned earlier, this is very important, because as I mentioned, most traders don't look at multiple time frame, but those who are successful, those who are smart money trader, those trade based on that liquidity. Those who has a higher volume in their trading, they all look at the multiple time frame. So because multiple time frame is where it will give you that higher time frame direction and the lower time frame direction aligning together. Now, what does also that mean to be multiple time frame aligning, higher time frame and the lower time frame aligning together? Let's understand that. It's also very important. Now imagine that you open a trade on the 5 minutes time frame based on this leg here. Okay. Now in this leg, in this 5 minutes time, how many candlestick per run? Can be 6 candle or 10 candle. Now, if there are 10 candles in this 5 minutes time, that means that it consists of 1 hour time frame that the volume is. And if in this zone, the market is in bullish trend, that means during that hour, all those order came here more bullish than bearish. And when you are trading on the higher time frame as well, or the bullish, that if the market is bullish on the higher time frame, such as on the 30 minutes or 1 hour or 4 hour, then in the intraday time frame, in the 1 hour candlestick per run, if you see that the market is bullish, that means in that 1 hour time frame or the 4 hour, in this whole session, the total volume in the market is bullish. So when you are trading on the lower time frame, you are actually aligning your order to the major flow throughout the day or throughout the session. And that's how you can maintain that trend based on the multiple time frame. Now, when you understand the direction, when you find the direction of the trend, you actually answer the first W. That means that which way the directional bias is still there is more left here. What is that? Is the entry. As you know that it's an uptrend or in a downtrend, it's not that you can directly enter into the trade, because where you should be entering the trade, at what level you should be buying or selling, because uptrend doesn't mean that you're going to buy higher high. We see that there's a very famous proverb, buy from higher high, sell from lower low. Doesn't work. Okay, it doesn't work. You can see that buy from higher high, you see it's just dropped. The actual way to trade is buy from breakdown, okay, sell from breakout. That is the right place, because when you see the market breaks down, okay, that means it has grabbed that liquidity. And when you find the liquidity, this is the second component of my trading strategy, is the liquidity. Finding where is the liquidity. How do you know where is the liquidity? And that's what you can find from the breakup structure. Let me show you what is breakup structure. In this 5 minutes trend that you can see, there are a couple of areas you can spot that breakup structure. This is a breakup structure. This is a breakup structure. This is a breakup structure. 3 important areas in this whole zone is the breakup structure. And you can see that if you enter in those areas, that's where the high probability trade. It's not that you enter from here. If you enter from here, in most likely you'll get either very poor trade, or you're gonna stop out just to see the market has taken the price in the direction that you wanted except yours. And that's what the trap, because from the technical perspective, most traders understand the technicality, because this trading is not easy, just a pattern. Being smart is where you stay ahead, because there are 9 traders may not be able to find proper profitability except one, and that one is you. And I'm sure that everyone here want to take the challenge of becoming 1% of these profitable traders. And that's all you need: a simple strategy, a mindset, that means the trading psychology. And that's also how do you understand liquidity. Once you confirm the direction of the trend, you need to find where there is liquidity. Now, how do you know where is liquidity? Because the chart is a blank, just some candlestick pattern. If you place some indicator, then you can see that, but there's nowhere written that liquidity, right? That liquidity is found in some areas in the chart. And to understand that, the first step is to know that where the most of the stop loss is placed in the chart. Okay, and finding the liquidity is very important. Is breakup structure same as the order blocks? No, breakup structure is not same as the order block. So to understand the whole mechanism of how the market moves, then you will understand the order block as well as the breakup structure. There is GPS in the market. If you want to navigate this market, there is a specific way the market moves, so that you know in relation to the price action market structure where you are at. So order block is not the breakup structure. This is order block. Okay, so if I look at here, this is order block and this is breakup structure. Right? Okay, now why this is order block? Order block is where the market changes its direction. You see the market was trending down. It was in a downtrend. And after a trend got exhausted, the market will never change the trend straight away. It has a specific way to change the direction, either by creating head and shoulder, double top, double bottom, sideway movement, straight drop, straight go back up, or straight bounce and then return back. So there are some specific way or gap open. It will do something that will catches your eye from the rest of the chart area, which is called the reversal confirmation. Once you see the market reversed, it's gonna leave a neckline in that reversal. Either it's a double bottom neckline, inverted head and shoulder neckline. Sideway market, it will consolidate and will leave a very sharp areas where you can spot that order block. This is the order block here, where the smart money bought after this long downtrend. The market has broken from the order block, and then once the price breaks from that order block, it is started to trend. Why does this happen? As I mentioned earlier, asking question, being curious is the key to become a better trader. Why does the market move that way? It's very simple. When here you can see smart money bought here and straight, there is a complete reversal. After this break, order block formation, the market reverses, because as a retail trader, we have a huge advantage of we can buy or sell at any point within almost a second. If you place an order, 10 lot, 5 lot, 2 lot, even 20 lot, it's gonna fill within almost a second or so. But if you're a smart money trader, your order not gonna fill if there isn't liquidity, right? And because whenever you place such a big order, the price will go up. If you buy, the price will go up. When the smart money placing bigger order, that means from here buying in the sell in after this drop is basically most of them as a false breakdown, okay, to grab liquidity, and then they started to find those lower price to buy. Now once they start to buy, the reason they can't buy all those orders is because whenever the smart money is buying, the market is going up and they don't get enough good price. For example, this is the level that is the best price, and you can do, right? You can, if you want to buy 10 lot, you can do it here as a retail trader. But the smart money, whenever they are placing an order here, let's say they want to buy, for example, 1000 lot as an example. Now, once they bought 100 or 200, 300 as an example, not exactly, the price has gone there. And the rest of the 200 lot or 500 lot, no more here. The price already moved there because order didn't fill. The price has gone up because of the already placed order. Why? Because they need seller on the other side. If they are buying, there has to be a transaction between buyers and sellers. And when the price has gone there, the price became high, which is no longer very profitable to buy as it was here, right? And at some point, it's no longer to profitable anymore. Instead, it's profitable to take profit because the market is at higher price. This pullback is profit taking, right? And once you see the market slowly making series of lower high and lower, it's basically profit taking. Profit taking in a bull market is a pullback, retracement. That is where, again, place to buy. But the best buy comes from the breakout structure, because when the market has made its move, when it breaks any of this swing low, again there is a liquidity grab. That means they got another area to buy again. And when you are buying here, that is where the high probability trade, because here sometimes very confusing, because you don't know either this market will still be trending or it's gonna go up. But here it's very probable that this market will go up, because already freshly smart money bought from here, and that is trading based on liquidity. So you got the trend, you got the liquidity. The next thing is just wait for rejection from here, which is the price action confirmation. These are the three secrets that every strategy that I use, because this is the simplest way to trade the market. So once you know that, the next thing you need is to have a mindset, curiosity, and then trading based on that. And there is an indicator also available with me that I'm using to show me where the liquidity is. It's the premium indicator for TradingView that I use to find out where the liquidity is being grabbed. That means sometimes you might say, okay, here I got sometimes confused to find out when smart money breaking from the structure. If you are not sure, if you are in the premium group in the academy, there is regular update. You can ask the admin to give you access to that indicator, to that signal, where you can find exactly when the smart money is buying in the direction of the trend. So you can use it if you're in the premium group. If you're not, stay connected by joining the Telegram. You can find link below this video, where you can find more regular updates, where you can see how we are using this tool to find out the directional bias in the market. And as I'm getting some question here, gold, you can see the market is in this area. And in that area that we can see, the market is currently in a sideways movement. If you look in the 4 hour again, we can see this is a long wick doji. Guys, as I mentioned earlier, currently the market from the intraday time frame, from the 4 hour chart here, this is where there is a rejection, and that rejection here, where significantly the market has broken back below and expecting the price to potentially trend back down here to this support level. And you can see the market is breaking below. So looking at the lower time frame, expecting the market to come back here, and this is current level of support here, which is not a very important area that we can look for possibly to sell at the moment, neither to buy, unless we see the market has penetrated that below, because it's still showing potentially bullish market structure. This is the current session's low here, and if the price penetrate back below 3346 level, we will be looking for potentially, if the market shows up on the higher time frame bullish, that means the 15 minutes bullish, if the market is coming back below to break that low here, remaining same way as we expected from the session's low, we can look for possibility to go long here in this market. There is a break below here, on the lower time frame, and I'm looking at this level here at the moment. We have 6 minutes for this candle to close, and let's wait to see a potential entry on the 15 minutes. So there is a ATR of 36 pip here. So if we look at, I might play, we could look for placing a buy limit here, not market order, pending order. So with nearly to 55 pip stop loss, a buy limit that I will be placing in that level. So if the market come back below here, we will be on the trade with 2 to 1. So it's going to be a buy limit here at 3346.10. If the market drops here, we will be entering into the trade. It's a buy limit. So place that buy limit here on Xauusd. This is a very key level of support, and expecting the market to trend back down here, penetrate that low, and then potentially to return back to the upside again. So place that buy limit here. If the market managed to break that low here, after this overextension, we will be in the trade. This trade, this pending order will be valid until this this move remain in that direction, until all those candles remain red to this level. The stop loss at that placed in this trade is nearly to 56 pip. Welcome. waiting for a possible entry here. Place that Xauusd a pending order for a possible drop back below here in this market. We see there is a bounce here to the upside to nearly to 280 or move here to the upside and rejected back below again. And that move, if the price moving directly to this level, hitting that at 3346.10, stop loss at 3340.52, TP target 3357. And if this market coming here with one single drop breaking that low, we are on the trade and waiting for that possible hit. If the market is not hitting, if it is printing a bullish candle, we will be canceling this pending order. Patience is key here, as I mentioned earlier many times, guys. When you are trading, the most important part here is to be patient, and that's where the best trade comes, when you are patient and wait for the right trade setup. If it doesn't follow your plan, then you don't follow the trade. That's how trading is. So you have to be very, very consistent in your approach when you are entering into the trade. No, we placed a buy limit here. So if the market drops here, we will be looking to go long, as still the market trend is bullish. It's a short-term day trade. We are not looking to enter a so far drop here, as if the market breaks this low here, it's gonna still be remaining bullish trend, as we are trading on the lower time frame, 15 minutes, and the higher time frame that you can see here. If the price cross this session's low here, we are on this trade. So it's a buy limit, as if you look at the 15 minutes chart here, we see that there was a liquidity graph from here. This is what I was discussing in the past, that we need to find the trend, right? A lower time frame trend and a higher time frame trend. Now you can see that this is the 15-minute chart. The trend is up. Very clearly you understand. If you have a little bit of experience, you should be able to see that it's an uptrend. If you are not sure, let me know here. I can clarify further, because the main goal here is to help you to learn and grow. And also the same strategy you can apply anywhere. You can apply on crypto, in Forex, in currency, in gold, anywhere. So the strategy is same. So it's a very powerful strategy. Once you see that the market has broken from the structure, right? You see that the trend is still valid to the upside here on the 15-minute, right? Not on higher time frame. The trend is 15 minutes. It's a bullish trend. Look for the higher time frame trend here. Okay. So from the 1 hour, we can see it is still bullish. And we see that that's a very good area that we are looking at. And once you see this is the 15-minute chart, the market is approaching that support level. And with that, if the price tests that level, we will be looking into that entry. Okay, so you see that 15 minutes now showing some downward bias here, expecting the market to potentially to retest and then to reject back again, back to the upside. Now this pending order will be valid till it remains here, the move to the downside. Okay, so you see that there is a possibility for a break of this support here, and we have placed that trade here, pending order. I'm expecting that drop here to this support, and then we will be entering into the trade. Welcome here. And this is where you can see slowly it's trying to build that pressure back below. And in that area, this is the 15 minutes move here. We see that nearly in the past from that level, we have seen the market has made to more than 2 ATR move. And now it's dropping back below here to this support level, crossing that nearly to again 2 ATR move back below with that movement. And if the market tests that level, expecting rejection back below here, and with that move, once the market managed to bounce back to, we are expecting to at least to catch here 75 to 80 pip or more. The target is to the upside here, and it may completely do the other way around. So make sure, guys, always make a proper risk management plan when you are entering into the trade. That's where the key here. So here we can see the market is slowly breaking below here to that support and expecting from that level here. When we look at the dollar yen is also currently moving in that direction here. And that's where you can see the market is slowly pushing back here to that level where there is a resistance line. Dollar yen, if you look at while we are waiting for an entry on gold, you can see dollar yen slowly trying to push back to the upside here. If you look at the daily, where there is a daily 10 EM, the market is approaching the daily 10 EM. It could turn back below here in that direction to create a new lower low in that market. So gold may trigger us. I'm waiting for that entry. Okay, so here you can see the market slowly trying to break that low here to this structural support here in that market. Few pips waiting for a potential trigger, which is buy limit XAUUSD at 3346.10, stop loss at 3340.52, TP target 3357.32 with tight risk. Very important to look at the risk management here. And from the 4-hour, you can see it's on the session's low, and from the session low expecting a rejection back above here, and that's why we want to catch that move to the upside in this market. We are looking at the major trend here, which is very important to look at. On the today's move that we have seen, the market has made its move back to the upside with a one single move, and where currently it's on a potentially to that level to as a pullback. And if you look at the 1 hour and the other time frame, that you can see the price is coming to the session's low, which is today's this 4-hour session's low. Expecting a drop back below here to this support level. Okay, so nearly to active, I'm still not entered. Okay, so the trade is, I'm active with the trade. The trade is active here with me. I'm on the trade. Session's low has been hit, and this is where expecting a potential rejection back to the upside here. So the 15 minutes candle just has touched that level here to the downside. Expecting a rejection here. We see there is a 15 minutes candle close, and that candle close, let's see how the candle close back below or carrying that rejection again. And that's why we are waiting to see the market to reject back again to the at least to the 4-hour resistance line. Sessions low is hit, and we look at here, we can see the market is in fact um, here is a support, and now we are expecting a rejection back above here in that market. Now depending on how this support is being acting, we'll see that how the market might be reacting in that level. We see there is a key level of support is broken, and the market is overextended below this key level with one single move, expecting the market to go back up here to that level where there is a high liquidity. Okay, so you can see there is a primary rejection here, and that rejection that you need to see the market to go back up for another wave of bounce here. That's what we are looking for, that move in this market. Looking at the 5 minutes here, we see there is a doji now. Um, Now looking at 30 minutes, there you can see the market has crossed this 10 and 20 EMA, and that cross over, looking at the 1 hour, it might test the 1 hour 20 EMA, and that's where 4-hour chart cross that low. From the daily, there's significant move. So from the 15 minutes, we'll be expecting a bounce back here to the upside, to this level. We see some kind of reaction potentially coming, and wanting to see the market is showing that pattern for that move back to the upside here in this market. Expecting it to move back here and to potentially go back to certain level. So that's why we would like to see in the first move that you will be securing profit if the market shows that pattern back to the upside to this key level here. 5-minute chart, this is another resistance line on the 5 minutes. We need that move back to the upside here to this key level, and once you see the market manage to go back to that resistance line, um, targeting to at least to catch 60 pip or above, if this is where it's getting the rejection back to the upside here in that market. We see the market started to bounce here with one single move, and that's what we're looking to see potentially. If the 15 minutes closing as a bull candle, either crossing this low, possibility to have another bounce back to the upside is higher here. rejection back again here. Um, looking forward to see the 15 minutes closing as a potentially as a bullish doji or a doji that can give a possible another potential bounce here to create a new higher high. Getting some rejection here and start to move back again and strike that move potentially to the upside here. Before the candle close, like to see this manage to bounce, and this candle is important because you would like to see the market manage to go for another potential pullback to the upside to that long-term resistance line here. We are running a little in profit here and got that back to the upside here. So we are up on these to 16 pip. Expecting to move back again to that resistance line 3352 level. So here is, we can see there was a breakup structure slowly trying to build up that pressure, expecting it to go back up to that resistance line where there is a liquidity here. And 3351 could be a level that we can look to see if we need to do adjustment with the trade. On the 15 minutes is showing that bullish reaction back to the upside. We are up 16 pip and now still holding on to that trade for possible further upside here. This is the 1 hour price action where 30 minutes closing as a doji, and okay, so we are almost nearly to the end of the session. I'm going out with this trade with the running profit. We'll be re-entering again once it appears again. I'm out with the trade as we are almost nearly to the end of the session. Let's secure that 16 pip and and as with the progression of the session, we could see that gold may rearrange its structure. Here is a support level. It's up to you. You still could choose to run the trade if you have done the proper risk management. You want to manage it yourself. As we are almost nearly to the end of the session. As coming up another session, we will be looking for further trading opportunity in the upcoming session. This is the first trade of the session, and there are more coming up. As with the next session coming up, would like to see that as the market is started to change its trend on the higher time frame as well, we might find further entry opportunity in gold and also the currency pair. You can see dollar yen after break of this high, getting that rejection back again. We might see this market to trend back down again. As you can see, it grabbed the liquidity and may continue to drop here, and I'll keep you posted, guys, in the channel. If you haven't joined the free Telegram, also I highly encourage you to join right now, as more often there are promotion to join the premium, where you can learn the strategy that I am trading, and also you can access my trading tools that I am using. So I'm out with the running profit, and patience, as I mentioned earlier, is key. Started the day, we will keep trading throughout the week and throughout the day. Coming up NY session, there's in just matter of from now exactly 3.5 an hour, I'm coming on live again. So guys, don't miss out to by subscribing to the channel and pressing that bell notification, so that you're not missing all the live session and educational session, as well as the trade setup that I'm doing in this live, and you don't miss out any of this that I'm posting as well every single day. Analysis, trade setup, live trade ideas. Thanks for joining this live session. We'll see you very soon with another session coming up very soon.